Okay guys, Australian dollar for Sunday the 25th of February. So we're going to have a quick recap of the market from last week in relation to our analysis, and then we'll have a look at the market for the trading week ahead, our key levels for day trading. So coming into last week on Australian dollar, we were a little bit more neutral. So we had made this strong bearish pullback, and we went over how at these levels we could look for potential bullish bounces, which we've seen. This was on the back of seeing a very strong bullish move up, then the pullback. There was the possibility of bulls watching for continuation. Then we had this rejection on Friday, and what we went over was how we were a little bit more neutral on this market until we started to break some of the key levels. So the key levels up above or the key levels down below. Now with last week, we've pretty much made a continued bearish movement. We had a little bit of bullish momentum on Thursday and Friday. What we can see on this wave down, well, let's go over it. So Monday and Tuesday we're pressing up to test at our 33 levels where we found resistance and the market moved down. Now we came into this level right here at 77 to 63. What we went over last week was how it's a good level to look for those potential bullish bounces. Now this is why, as a day trader, it's always good to look for both the bullish levels and the bearish levels, even when the market is making a move like this, a bearish movement. As a day trader, we can sort of step in and ride the shorter term movements, because for us, a movement of, let's have a look, we came down on the Tuesday, we tested at this support level, we were looking for the potential bullish bounces, and what did the market do? You can see from the tail on the candle, we popped up and then retested at our resistance. So 30 points. You get a 30-point bounce on the market from our level of support. And then what do? We find resistance at this level and we get the strong move down. Now, as we're coming up to test that resistance, what do we have? Spike down, spike down, spike down, spike down, giving us evidence that this level is still being respected coming into this week. You find the resistance, you get the move down. For me, really, this is a very strong move down and the potential break of this level. After the break of this level, we were looking for bearish reactions and potentially all the way down to the 7773 levels. Now we haven't made that full move down as yet. We spiked up on the Thursday. What did we do on the Friday? We another strong move down on the market, rejecting from where? From this resistance level. So coming into next week, once again, really the levels have confirmed that they are sitting at the same level. So we don't really need to adjust any of the levels. What we're going to do is add one in down here to take into account this recent bounce. So 7803 to 7790 right here. Why are we doing that? Because the market has given us the evidence on the close of this candle, then the bounce here, that we have a support area. So coming into next week, really, let's have a look. Still a little bit more neutral on this market until we start to break key levels. Previous swing here, and really up above we went over the 8,000 level. It's really if we start getting back up above that 8,000 level that we're then looking for the bullish bounces higher into 8,020 to 840, and then above there we're turning more bullish all the way up into 875 to 8,100. So key levels up above. This and this really are the breakout levels. If we start breaking up above the previous swing at 7,955, it's starting to turn a little bit more bullish. And really, I'd be happy to start looking for buy positions, but really this is the key levels. So remains resistance coming into next week. If we start breaking up above this zone, it's worthwhile starting to look for bullish bounces and the moves higher. But really this one and this one are the key areas. This level here coming to next week, 894 to 911. Is strong resistance. We've created this flat section of price action. We've already tested it on the Wednesday. If we do see the market pressing higher, it's a good area to look for the weakness and the potential moves back down once again. It doesn't mean this market is going to make the bearish movements. As I've mentioned, we need the key levels to break before we get the evidence, because what we could be seeing here, this is what you're always looking at as a trader. You're not looking, or you are looking for the potential of what's going on here. We've had a very strong move down, but we moved down into a key pullback level where we were expecting the bullish bounce. We've then made another move down. This move down is bearish. However, we're starting to bounce. What could this potentially be turning into? A double bottom. where would the confirmation of the double bottom come from? Our key level right here. If we start breaking up above this level now, it's very likely we're seeing some sort of double bottom. That's why we start to look for those bullish bounces and the moves higher up into at least our key levels of resistance. And then if we start breaking up these levels, it's very likely we're going to see that bullish continuation once again. As day traders, you know, we're trying to look at the, not so much the very big picture. We're looking at the medium term picture, but also the very short term picture. Because like on these, the moves down, we can still look to capitalize on shorter term movements. So really that's the potential with that double bottom. That's why we're looking for the bullish resistance if we break up above. However, on the move back up, this has been proven to be key resistance or key support, and we've broken down and we've tested it as resistance. So if we start to test here, it's worthwhile looking for the bears to step back in once again. We've also got the level right here, and we can actually bring this down a little bit. 7863, we're going to move it down to 7860 up to 7877. For me, this is a little bit more minor, but it's still worthwhile watching for resistance. Also, if we break up above, for those bullish bounces to retest at this key level. Also, this 844 to 830, this level remains good resistance coming into next week. Looking for those moves down. Also, if we start to break up above, it's worthwhile looking for those bullish bounces from this level. The only issue we have with this one is we have the MA200 sitting just underneath. So sell positions from here, you're really going to be testing at this level. You want to be a little bit more cautious coming into that level of potential support. And then down below we have 7800 to 7790, or really 7805. This remains good support now because it's given us proof that it has been holding as support. And then we have 7775 to 7760. Very key support. If this level is breaking, moving forward, then it starts to give us the bearish sentiment, and we'd expect the move down to at least 7715, but really I'd be expecting to see 7700 down to 7685 tested if we break down below here. Okay guys, so that is everything for the Australian dollar coming into next week. Still got these very key levels up above, very key levels down below. We're looking for the potential now for a double bottom. If we break up above here, it's giving confirmation. We can start looking for those bullish bounces. Key resistance coming into next week is sitting right here. And to look for the bears stepping back in if we get the rejection. Very key support at these levels right here if we start to break. Also this one, if we're starting to break down below, I'd then be happy to look for weakness and moves down to at least this area right here. If we're breaking down below here, as I mentioned, at least 7700 would be in the short to medium term my expectation for Australian dollar. Okay guys, so as always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.